I had been buying. I'm 24 years old, so a little age difference there.
Hmm.
And I started in college buying, with my first deal being a 12 unit property when I was 20 years old.
Wow.
And by the time I graduated college, I bought about $7 million in property, 120 apartment units, all syndicated. I started with nothing. I was a broke college kid like everybody else,
Wow.
and just hustled my way to it. Learned how to raise money, and got really good at syndicating.
Welcome to the Wealth Through Real Estate Investing podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and reach the lifestyle you always wanted. And now your host, Dwaine Clarke.
Hello and welcome to the Wealth Through Real Estate Investing podcast. This is your host, Dwaine Clarke. And today we have David Toupin. David is a multifamily real estate investor and co-founder of Obsidian Capital Co. And we're glad to have him here today. How are you, David?
I'm doing great, Dwayne. Thanks for having me on, man.
Very cool. Yeah, I know you've been very busy. You guys are killing it. You're out in the Texas market, just doing a lot of different deals. So I'm just really appreciative to have you on and kind of inform our listeners and a little bit learn more about you and your company.
Yeah, no, sounds great. Excited to
So
share.
I know you've been pretty active as far as a lot of people know you as a syndicator, multifamily investor. But for those who are not familiar with you, would you mind, sharing with us for your background and how'd you get started in real estate?
Yeah, absolutely. So, like you said, I'm a multifamily investor. I am a co-founder and partner of Obsidian Capital down here in Austin, Texas. My business partner, Glenn Gonzales. We've kind of got an interesting team. He's 51 years old, and he's been in the industry since he was a maintenance man at 23 years old. And he worked his way
Wow.
up from being a maintenance man on apartment complexes all the way to owning about 4,500 apartment units. So
Wow.
I built about a $250 million portfolio, sold it all off. We met last year. I had been buying. I'm 24 years old, so a little age difference there.
Hmm.
And I started in college buying, with my first deal being a 12 unit property when I was 20 years old.
Wow.
And by the time I graduated college, I bought about $7 million in property, 120 apartment units, all syndicated. I started with nothing. I was a broke college kid like everybody else,
Wow.
and just hustled my way to it. Learned how to raise money, and got really good at syndicating. So we started Obsidian Capital about a year ago, and I'm very analytical, and Glenn recognized and liked that quality about me, and so we partnered up. We've bought a couple hundred more units this year, and we're doing about $20 million in new developments right now. So
Wow.
we're rocking and rolling.
What a transition. That is
Yeah.
awesome. Yeah, it was really impressive that you started out at such a young age. And I
Yeah.
could just remember in college, not the typical college student is thinking about, buying, 12 and 50 units and, raising all this capital. So that's pretty cool. I mean, I was pretty
Well, it's crazy.
entrepreneurial.
I mean,
Yeah,
yeah,
exactly.
it's crazy. I mean, I had a very typical college experience like a lot of people. I had my freshman, sophomore years spent partying and having fun and, all that good stuff. But I don't know, I guess I had self-awareness in me, and I listened to people that were older than me saying, I wish I had started younger. I wish I started younger. And I was like, man, well, I might as well just start while I'm young.
Hmm.
So,
So
yeah.
as far as kind of like, can you take us, maybe you said you'd start out with like a 12 unit or something. Can you kind of walk us through kind of like how that first deal was and how'd you put it together? Maybe I can inspire a lot of some young listeners on the call today.
Yeah. Yeah. So, not having any money to keep for me was like, okay, I got to find a deal and then I can put the rest of it together, because you can't do anything unless you find a good deal first. So I had done a couple internships in like investment banking, consulting in college, and I got really good with Excel and numbers. And so I just started reaching out to brokers. Listened to a lot of podcasts, read books about multifamily. So I was starting to learn all the little nuances and all the general way to analyze deals. And I would just reach out to brokers, go on LoopNet, find deals, get the financials, and start underwriting them, throwing them in a spreadsheet and figuring out, how does this all work?
Mm.
How does the income flow to NOI, and what are the general operating expenses and different metrics like should operating expenses hover around, 40% of gross income or 55% of gross income? And you just learn all these little things. And I ended up getting an offer accepted on a 12-unit property. And I was like, shit, what do I do now? I don't have the money to buy this. So I had somebody kind of lined up to sign on the loan, and had a few people in mind as investors. And so I put it all together, figured out I needed about 180 grand to close on the deal, $425,000 loan. We were going to buy it, do some renovations, up the rents about 75 to 100 bucks. And so I had to talk to a lot of people. I think the original list of investors I had, none of them invested. I couldn't get any family to invest. And quite frankly, I didn't really want to ask any family until I had more experience. But I just worked my way through and found some local fix and flippers. I think a guy that owned a State Farm insurance agency, people like that, that just put in 25, 50,000 each. And I raised the money and self-managed it. And then from there, I kind of just rinse and repeat.
Beautiful. That's an awesome story. And like I said, that's just very inspiring. As far as kind of like your partner, you said your partner was in the maintenance, and then he was obviously touching and he knew the product
Sure.
very well. So it was like an excellent match where you're very analytical, the numbers, he knows like everything in and out of the property. How did that relationship start? Because I know a lot of people are looking to strategically partner.
It's a perfect relationship, and he is a master at operations. I've underwritten thousands of deals. I still would not consider myself an expert at underwriting, even though that's like my superpower. He is absolutely an expert at operations. He worked his way from maintenance man to leasing agent to property manager to regional manager, president of the management company, and then he started buying. So he has been in every position possible in management. He's an absolute expert. So that gives us a lot of credibility operationally. And then I'm very good at the financial side of things, the numbers, lining up the banks, raising capital. We both wear a lot of different hats together, but we vibe well. And we met, I guess to answer your question, we met at a mastermind. So we're both involved in a mastermind group with a guy named Rod Cleef. He's got a big multifamily podcast, and we both kind of found our way there and started networking through that, met, and we just vibed really well.
Beautiful. So let's kind of talk about a little bit about your business. So I said you're in Austin, Texas. Is it primarily your focus in Texas, or are you in other markets?
Yeah, so we focus not as much in Austin for existing product because it's so expensive. I mean, cap rates are crazy here. So we focus a lot in Dallas, Fort Worth, Houston, San Antonio, and then we are doing several new developments in Austin now because we've realized that you want to buy B and C class assets that are built in the 70s, 80s, and 90s. You're paying anywhere from 110 to 140 a door, and we can build A minus product, not high end apartments, but we could build A minus product, small amenities for around 140 a unit. So we're doing about 130 units new development, some commercial space as well right now.
Wow. So do you guys kind of focus like where you guys are managing your own portfolio? Do you guys work third party property managers? Like you have like a build out team like that, or are you guys kind of more hands off?
Yeah, we use all third party management.
Oh, nice. And as far as kind of like how you guys are getting your deals, I know you mentioned you found a 12 unit with working with a broker. Since you guys are, in the business actively, or are you guys finding like off market stuff, or is kind of like your bread and butter?
Yeah, we do both. So I work with tons of brokers. We have a lot of good relationships with brokers. And then I also, Glenn and I have built a team of acquisitions people. We've got 10 people that do cold calling and outreach directly to owners.
Wow.
And they're all part-time. They do about, maybe 5 hours a week each. But they're on full commission basis. And we set them up with a list. I kind of coach them on how to cold call owners and speak with them and the lingo and everything. And then we, essentially we get on call every week and review the leads they have, and they're bringing off-market deals to us all the time.
Wow.
So if they find a deal, we're going to bring them in on the ownership side and give them a piece of the acquisition fee up front and stuff like that. So it's a way for them to get involved without having to put a ton of time out, but they can get into the business that way.
And do you guys have, are you just running all of the numbers yourself, or do you also have people who are analyzing deals too?
So I have a director of acquisitions here, and he does all the underwriting, the preliminary underwriting for us, to save me some time. And then I will review all the numbers as they come in. So, deal comes in from a broker with the financials, I'll tag him in it. He'll underwrite it for me, send it to me with his synopsis. I'll review it, talk with my partner, and we'll make a decision on what offer we want to put in.
Nice. And then what kind of asset class are you guys focused on? Like BC? Is there like a specific, or is it deal by deal basis?
Yeah, we look at BC value add, built in 1970 plus. We don't like 60s and older. No flat roofs. No. I think that's generally it. We like primary markets. We're strong growing tertiary markets, stuff that has growth to it, and that we can expect some sort of value add component.
I know you had mentioned that you guys doing, looking at, development and stuff. So is there so you guys won't touch like any heavy lifting stuff, or is it more cosmetical on your, the value add type of deals?
We'll look at it all, as long as it's not turnkey. We'll do anything from a light to a very heavy value add. We've done a mixture.
And how many properties do you guys own now, and like the number of units?
Well, we've sold a lot, but we're hovering around with me and Glenn. Glenn still owns some that he's selling separately from me, but around, I'd say 1,500 units. Together, we're at around 500.
Oh, wow. Beautiful.
Yeah.
And then as far as kind of like, I know you had mentioned you got like a State Farm investor and those type of investors. Is there ways that guys are like constantly doing that helps to bring in like because you guys, need new capital as you guys expand?
Yeah, man. I mean, just network. That's honestly the key. I go to tons of events. Glenn goes to tons of events. We're always networking with people that are considered high net worth individuals, accredited investors. We do sometimes do deals where we take sophisticated investors as well. And then I'm very, very active on social media, and social media has been huge. I've built tons of relationships with investors through Facebook, Instagram, LinkedIn, and leads to our website as well. So kind of all the above, I would say.
Wow. Do you guys do any like local meetups besides from like going to others, or you guys like have your own events or anything like that?
We do not. No, maybe at some point, but currently we do not host any meetups.
Oh, very cool. It's awesome, because I'm starting to learn more about how people are just utilizing social media to just to build that audience. And it just doesn't seem like it from face value is like, on social media and then, getting accredited and sophisticated investors, but it works. And you guys are a testament to it. Yeah, exactly.
I mean, a year to 2 years ago when I was starting, there were people that were telling me like, dude, don't spend your time on Facebook. Like, stop spending your time on Instagram. The people that are going to invest in your deals are not going to be wasting their time on those platforms. And it was BS, and I didn't believe it. I knew that social media was obviously huge already, but going to continue to grow more, and that everyone is on those platforms. Doesn't matter how much money you have. And so I have had people, I still do constantly, that will reach out to me through Facebook Messenger and Instagram DM that are like, I love what you're doing. I want to invest with you. And, let's hop on a call. So I'll start to build that relationship with them over a couple phone calls, or we'll go meet up. And then, we've raised, I'd say well over $2 million just through social media alone.
Wow, that's sweet. Yeah, I'd love to hear that.
Yeah.
So as far as kind of like your deal structure do you guys do like, syndication fees and preferred returns, or is it kind of a deal by deal basis, for your investors?
They change pretty much every deal, but we just do straight splits with our investors. We'll normally do like an 80-20. If the deal's really, really good, we'll do like a 75-25, maybe a waterfall over a certain IRR. But normally we just do a straight 80-20 split, no pref. And then, investors get the 80, that's Class A shares. We get the 20%. And then we invest in all our deals too, alongside investors. A lot of times we're the biggest investor because we just
Mm,
like investing in the deals. And then we also do charge acquisition fees and asset management fees.
mm. Yeah, that's awesome. As far as kind of like where you guys are looking to take it in the future, I know you guys just looking at, build up the portfolio. We had mentioned pre-call that you're looking at to some development and some office and other types of assets. Can you kind of talk a little bit about that?
Yeah. So we are with these couple new developments we have going on right now. We would definitely want to get these off the ground. One should be starting within the next 90 days. Get them off the ground, and maybe we'll add in more next year. But development is definitely a branch of the company we want to grow. Uh, we are going to continue doing existing acquisitions, and within the next 5 years, I could see us, acquiring anywhere from 5,000 to 10,000 apartments is the
Wow.
goal. Yeah, we're looking to rapidly grow. It's tougher in this market with it being so hot right now. There's not a ton of deals, but we've got some great systems, and we're good at finding off-market deals and being the first to the brokers. So we have a great pipeline, and I see us continuing to grow, even though we're being very conservative. And if something happens, if something changes in the market, we're looking to be prepared for that too, and different ways to
Exactly.
fund deals and acquire deals that might not be performing.
Mm. And as far as kind of like marketplaces, you mentioned Texas. Is there any other places that you guys like really like that you guys are going to be eventually venturing into?
Yeah, we own a deal in Atlanta, so I like Atlanta a lot. I like Charlotte, North Carolina, Indianapolis, Columbus, Ohio. Those are kind of like Midwest Rust Belt cities up
Hmm.
there, but I think they've got decent growth, and they're just better cash flow than you might find in places like West Coast or
Exactly.
Florida, stuff like that. So um, yeah.
Cool. I would know that you kind of what would be like some advice for some younger investors getting in that want to kind of get to your level eventually, or how they start? I know you started out very young and you was very curious and then you took action. But for people like, they're listening and they're like, I'm very inspired hearing on this interview. Like, what would you give advice to them for?
Dude, you've gotta first educate yourself a little bit and figure out what you want to do. I just figured out multifamily is what I wanted to do, and the next step is you got to focus and you got to grind hard. I mean, I'm since I started consistently 80 plus hour weeks every week, like for me to be able to push past that age barrier and not having any money, I think I had to probably work twice as hard as somebody else. And so I think that's really what it takes. And just network like crazy. Change who you're hanging out with,
Mm,
and it's going to level you up. Start hanging out with people that are where you want to be, and it's going to level you up to where they're at. And that's
absolutely.
that's the key.
Yeah, I love that. Yeah, great advice. So what's kind of like a typical day for you? I know you have your team and everything and you're working on a lot of deals, but there's a specific morning routine that you have? Like what's something like that look like?
Yeah, I'm kind of start working by 8 every day, and then something I like to do is I keep my mornings open all the time. I never schedule any calls or appointments before noon. And what that allows me to do is take whatever my daily focus is and 100% without any distractions work on that. So I don't have people calling me and interrupting me or whatever. The mornings are like if I need to analyze 5 deals, I know I have the time tomorrow morning to do it. If I
Hmm.
need to, building a software company right now, if I need to do some work for that, I know I have time blocked. No matter how busy the rest of my day is today, I know I have time set aside tomorrow to be able to do that. So mornings are always open. Afternoons are just craziness, calls, podcasts, interviews, meetings, stuff like that.
Cool.
So
You had I had noticed like on your web, do you have like your own like spreadsheet software or like Excel sheet that you're using for your company? And can you talk about that? We'd love to hear something about that.
yeah, man, absolutely. So when I started, like I said, I was kind of an Excel geek, still I am. And I started this spreadsheet. It was just a one page when I first started it. And over the past 3 years, it's developed into a really solid analyzer for multifamily and syndications where you can do anything from, decide on investor splits. You want to do an 8 pref and a 70-30 split with investors, or you want to charge acquisition fees. You want to buy it for a certain price, refi at year 3, sell at year 9. Like you can just play with all these factors, and it's really well set up, to where a lot of people have switched from other analyzers they're using to mine, just because it's got everything you need, but it's laid out pretty simply, and it makes it effective, and allows you to analyze them pretty quick. So there's a free one on there, which is a little more simple, and then there's the full version, which is $250. That's on my site. You can go check it out there. Some video walkthroughs too.
Cool. And what where can we get that?
So the website is obsidiancapitalco.com, and Obsidian is spelled Obsidian, and capital letters co.com.
Cool. Yeah, I'm gonna make sure everyone put in a show notes so everyone could check that out. And I always ask my guests, this question. Like I said, it's a very important question. I always get a lot of good remarks from this. Is what are you most grateful for?
Dude, I'm most grateful for the people. I think the people that I've met, and probably my parents too, who helped instill at me at a young age that, although I was different, a little hyperactive kid, they pushed me towards entrepreneurship, and that always stuck with me. And then, all the great people I get to meet in this industry. There's a lot of really cool people and a lot of young people that I love helping out. I had people help me out coming up. So whatever I can do to help other young people or anybody really that's trying to get started, that's part of my mission.
I love it. Yeah, David, it was awesome talking with you, learn more about your business, kind of where you guys are taking it to the future, learn about your systems and your software and stuff like that has been awesome. We look forward to connecting with you again soon, and take care. Have a great week.
Thanks, man. You too.
Thanks for joining us on this episode of the Wealth Through Real Estate Investing podcast. Don't forget to subscribe and leave us a review on iTunes or the listening platform of your choice. Also, please check us out at DwaineLClarke.com, as well as find us on Facebook for more useful content and resources.